Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Monday, June 9th, or June 4th, rather, and hope you guys had a good, enjoyable weekend here. We're gonna jump right in here. We got a pretty light day today for economic news releases. We have just the factory orders for April's numbers. So back in March, we had a negative 2.1. Most forecasts were showing an improvement of 0.1%. And basically the reality came in and we're still at a contraction here, so negative 0.6. So better than March, but still negative numbers here. Uh, so we'll take a look, see how the market is looking at that. So Wall Street's a little mixed today. Dow's been down as low as like 50 basis points, but the Nasdaq and S&P 500 are kind of going back and forth, and it's real kind of light trading. So obviously, coupled with the bad jobs numbers last Friday, and then factor orders kind of showing some disappointment. It's not looking too good. So basically, what most investors are kind of thinking is that the Fed's going to be basically forced to do something, probably another quantitative easing here sometime in the near future. So they're going to be you're going to probably hear that's being spoken of. Here coming in the near future, here people talking about that, the quantitative easing. Now, another item to note is reports that European leaders are kind of bailing out Spanish banking system. So the Spanish banks are having some difficult times, as we've kind of mentioned before, and the European leaders are kind of gathering together and trying to figure out a way on how they can try to maybe create some liquidity in the Spanish banking system, so that way they don't have a big run up. There's also a lot more issues going on over there. There's reports from Der Spiegel over there that perhaps Germany is talking, maybe looking at maybe conceding on a few items that maybe they're opposition to, like for example, a European bond, for example, versus all the different sovereign bonds to. Um, some other items there to note that they're opposed to before. And basically, what they're trying to say is that, okay, if we do this, that maybe we have to have the other countries maybe give up some sovereignty in this category. So in essence, kind of almost trying to make them as one country versus still all the different sovereignties that are still going on there. So that's some of the stuff that's going on there. And then there's also talk that they're trying to talk to Spain about trying to accept some more help, where maybe Spain's kind of resisting a little bit here regards to the banks and stuff. So again, a lot of different reports coming out of Europe right now, and different aspects right over there. So you're going to hear a lot more of that. This stuff's been kind of going on for a while, just starting to come maybe more to a head now and obviously this stuff needs to be resolved a lot more quickly than because it's kind of pulling everyone else back. So investors are really concerned because you got the mess in Europe right now, and then you also have China, who's showing that their factory growth and everything else, their manufacturing is on decrease as well. So that doesn't leave a whole lot of growth here for the U.S. When it comes to economy. So they're trying to increase a little bit, but if everybody else slowing down, we're kind of stuck in the middle, and we relied on the other countries with our GDP and everything else to kind of move forward. So we may be kind of forced into a recession as well. So these are numbers to watch for, and so we'll jump over to the bond market now and see what the interest rates are doing. Sorry about this graph here. I was having some issues with my other typical graph here, but here's where we're at. We're still on a very good level here. We're at the 105.19 level right now. We're down a little bit from what we were on Friday. We do have some corrections due, as we saw. We have some opening gaps here. We do have a big opening gap here. So we have a couple opening gaps that at some point they're going to close up. So we are due for some corrections here. It could be when we do a bond rollover, since we're going into a new month. That could be another week or two when that happens. And you'll see usually a big correction. It's usually about like 30 some basis points that usually brings in there. So at some point we'll kind of close this up and then might have another run to close this up, or this could take a while to close. So depending on where the market lies right now, there's not a lot of optimism with what's going on, but we'll kind of see how things play out and see if we have any improvement over June and July and such. So interest rates are still pretty good, slightly off from Friday, but still very good levels here. I would definitely jump in. We haven't again really been in this level in the 105 on the 3.5 coupon. We're probably moving over to the 3% coupon here sometime very soon. and probably tracking that. But right now, we haven't really been on the 105 level. So these are extremely great rates right now. So if you guys are looking to refinance, perfect time. If you guys are looking to buy it, try to get in now so that we can lock in your low rate. We don't know how they'll still remain low for a while, but to be this low, we don't know how long this will be. This could be very short lived. All right, folks, you guys have a wonderful day. Stop by Mike's Daily Market Report, subscribe, and I will see you guys tomorrow. Have a wonderful day.